Hello, traders. It is 8 a.m. Chicago time on Tuesday, the 29th of September, 2020. Thanks for joining me today. Hopefully, I'm coming across to you nice and clear and I'm not blowing out your headset or speakers. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1847, 1847, on our way to 1,850 episodes. The saga continues. The market unveils itself and shrouds itself from day to day. We're here to decipher what the participants' intentions are and to take advantage of them. This morning, the overall risk sentiment is really risk off ish. Um, it's we're below yesterday's close on or settlement on various products. Crude being the weakest, but not by much. 34 cents. Crude trading. November crude trading at 40.26. That's the WTI crude. 40.26 down 0.84%. The Nasdaq's off 26.20. Well, just jumped to 28 points or 0.25%. The leader today is gold. Gold's trading at 18.89 and 20 cents, up 0.37%. The euro, the cable, the bund, the 10-year, and the bonds are up. Allocation is to safety this morning. The overnight inventory in the ES is even, about equal, above and below the close. And that's where we stand this morning. We're in a very important area right now in the ES. We'll go over that in a minute. In terms of what's on the calendar and what's scheduled, quite a few numbers out of Europe this morning. We also got, we did get consumer confidence out of the Eurozone, came in line at 13.9 negative. The inflation rate came in at negative 0.2 out of Germany, in line. Goods trades balance advanced came in worse in the U.S. at negative 82.94 billion versus negative 81. We got wholesale inventories at which were higher, which is actually bearish. 0 plus 0.5 versus negative 0.2. And then just now we got the Case-Shiller home price numbers year on year, 3.9 stronger than the 3.6. And the month-on-month for July is 0.6 versus 0.3. What's remaining on the calendar today is Feds Williams at in about 10 minutes. Feds Harker at the U.S. Equity Open. Bundesbank Moderer speaks at noon Eastern. Feds Williams speaks again at 1 Eastern, and then after the close we get API crude oil stock change at 4:30. Retail sales out of Japan, MBS manufacturing PMI and non-manufacturing PMI at 9 p.m. out of China. And then we have the presidential debate, which I will be here for this evening at 9 p.m. Eastern, and then Caixin manufacturing PMI at 9:45 out of China. 8 o'clock tonight, U.S. presidential debate. Might want to just pay attention to the market. The market has little to go off of in terms of how this election is going to go. The polls are like a neck and neck type of race, so the market's likely to price those in. Let's hop on over to our review segment. Yesterday, two key ideas. Both leaving a gap zone below. The expectation is a test of 33.20, 33.17, 17 right here. The composite low volume node on top of the low volume node of the session. The first is a test higher. Take out the overnight high at 37. Respond, come back to about 17, and then hold steady in the middle. The secondary, which is what actually happened, pull back to about 20, consolidate, push up, and then hold steady. Push up as far as 33.60, and then hold steady at 33.40. So dipped 20-ish, push to 60-ish, and then come back in to the 40-ish. Why ish? Because this is all about zones, not precision. Trading is not about precision. So here's what happened. We had an open auction out of range. You can see the market kind of dipping through. There was a nice stair step down here towards the gap fill. And a very clean break higher. Don't usually see it this clean, but yesterday had a pretty nice stair step down and then a break, which resulted in a very strong impulse. As you can see here, 22.75 points. That's a really decent impulse. And then from there, we have another stair step down. Consolidate in the middle. This is when it became clear that got to keep our hands off. And then we finally push into the 49.51 right there. And then we come back in. Look at where the point of control was built. Point of control 33 4T 0 0. Right? 3340. We shifted we shifted the point of control from the prior day way up. We left the gap zone open. So yesterday played off the music sheet very, very well. There's the gap zone. Played off the music sheet very, very well, shifting the point of control higher, showing us a very valid value area, quite compressed value area actually, and holding steady. The value area is between 45 and 33, 33 being the open. We're currently trading at 41.5. So this is yesterday. Look at the delta throughout. Delta just steady, steady, steady buying into the close. Very steady market yesterday. Since then, look at what has happened overnight. Now remember, I talked quite a bit about this 40-50 area. The overnight session, what does it do? It builds a point of control at 42, the prior point of control at 40, the composite point of control at 40.50. So composite point of control, the big picture, one that's started from December 23rd, 2019, the numbers 33, 40, 50 is the high volume node. What do we expect around a high volume node? Can anybody tell me? Those of you who have been around a long time, have been doing this online for about 12 years now. I can't wait for you because there's a 15-second delay. But around a high volume point of control, we expect the market to approach, get sucked in. This is like a high gravity or a magnet area. Get sucked in, consolidate, and fail, or get sucked in, consolidate, push away, come back, retest, and move to the next low volume node. In either case, we're looking at chippity, choppity, choppity, chop, like we're seeing, right? So we move to a balance. Do I have to pull up the peanut butter example, the peanut butter jar example? Or how about the price of beer, for those of you who drink? It's like, you know, the price of a good beer, say, is $3. At $3, you are going into the store and you are buying it, and there's a lot of trading that occurs at $3, right? So let's draw a profile. At $3, we have a high volume node, and at the top of the bottle, we have this distribution. If the price goes up to $3.50, you're still going to buy it. You're just not going to buy as much. If it drops to $2.50, you're going to try to buy a lot of it, but the sellers aren't going to sell you as much. Okay? It's not going to sell you that much. Come on, it's not a middle finger. Here, I'll put a label on it. They're a majestic Schlitz label or something. 250 supply is going to get reduced. Demand is pretty high, so we trade a little bit less. Okay, but if the beer is all of a sudden $6, only those who are in real need are going to participate. So the volume is going to drop off quite a bit. We have what's called an excess. And the market generally moves back to equilibrium. It moves back to this $3 figure right here, the point of control, because that's the point of equilibrium. That's the point of equilibrium, and that's where the most trading, the most participation is expected, and that's what the market's looking for. Now, something happens, a drought, there's not much grain, blah blah blah. The price of beer moves up to $4.50, $4.50, and it stays up there. After a while, you accept this price, you accept this new price, and we have a new high volume node at $4.50. And now we understand that there's an acceptance of price, and if it drops below, people are going to buy it, a lot of cases of it, until supply dries up. And if it goes higher, then people are not going to buy and supply stays open. That's what we're doing. This is your $3 beer here, except this beer costs $3,340.50. Okay, so that's where we are. Please remember, this is the basis. This is the important basis of what we do here. This is the unfair price below at 18 and a quarter now, 17.75. The unfair price above is at 92, and that's the zone we're in. We are likely to migrate across this area until we breach one of these. And if we breach the lower side, then what are we going to do? What are we likely to do? We are likely to move to the next high volume node. So if we breach this, then we are likely to walk ourselves down back to the 92.75, down to the low volume node, and so on and so forth. That's the basis of auction market theory, and it's a theory, but it's how the markets work. Okay, understanding how the markets work is really important. So this morning we pushed to where? We pushed to the edge of this next high volume node. This you can see it marked here, 61.75. This 61.75 stock zone has been here a while, and it held up. Right. There's no magic to these stock zones. This is just based on either volume profiling or some statistical levels, and these are areas I'm expecting the market to respond in, and it often does. Comes right back to the composite high volume node, and we hold steady, and we are in balance overnight. We are in balance with the composite, and we are in balance with yesterday's auction. So choppy open most likely. Okay, moving on. So I hope you guys, that was a quick crash course in how the auction works. I hope you guys could follow along. Looking at the order flow this morning, really not that much action. I can see that there's right after the right here, you can see an algo kick in right after the 8 o'clock numbers. You can see an algo all of a sudden kick in, and all this volume starts. You can see almost like a faint line across the board. Not seeing clear and distinct areas. We do have the 63 from this morning offered. We do have the 70 offered long term, and we have the 25 bid long term. Everything else is kind of chip chopping in and out. Not much to glean from the overnight session other than the fact that we do have a positive delta. A positive delta of about 2,400 from the open, or 24,000 from including yesterday. So this resets, this delta here resets at 8:30 Central, or from cash to cash. The tape shows some relatively active selling. Come on, switch. Some relatively active selling. You can see the tape here is painted orange, or on the sell side, a fair amount, but overall when you play the tape back, it's really just balanced. So that's what we're going in with today. We've done a good job pushing higher. We've held higher prices. We built balance yesterday. We have a gap below us. In other words, a weak structure, and as long as we hang tight to yesterday's lows, we should be in good shape to continue higher, right? Not that I have a bias either way. So what are we expecting for today? Aujourd'hui, or heute, this morning, again, chop, expecting chop here, likely to lull us into complacency, and then we are likely to form some sort of a compression. My expectation is it's likely to test lower into that 33 open from yesterday, and then we're likely to impulse higher and migrate prices up. Yesterday, once the first hour passed and this gap zone was not filled, I believe I marked the gap zone. Yep, gray. Once the gap zone is not filled, this tells us to stay off the short side. I'm expecting this to continue today, and I'm looking for it to squeeze into this 61.75 again and push the high on its way higher. A lot's going to depend on tonight's debates. It's going to be interesting to see how things play out, how Joe Biden and Trump perform against each other in the discussion. But I expect the market is likely to respond to these things. So I think the market's going to take a little bit of a kind of wait and watch perspective. The secondary is an open that tests higher, that tests into this 33.50 area, consolidates for a bit, rolls over, impulses down, takes out yesterday's value low, and starts to make its way through the stem of yesterday before it breaches this low into the gap and a test of 33.18 right here. 33.18 before it comes right back and finishes somewhere below the 33.40. This is the markets exhausted after popping higher scenario, breaking the one-time framing up that is setting up. But overall, the range today I'm not expecting the range to expand much more than what we already have in the overnight session, except to the downside. I'm looking to the downside down to 18 and a quarter, all the way up to 63. That's a wide range, 45 points. But it is Tuesday, and it's likely to test one side or the other. The goal this morning is to just sit tight right at the open. Sit tight, given that we're opening right in chop, unless, of course, you're scalping. It's sitting right in chop. Sit tight, wait for it to form some sort of a consolidation pattern, consolidate, compress, and break, and then start trading from the side of the break. This is what I'm looking for this morning. Hopefully, you've got your plan, you've done your homework, you've got your plans steady and ready. One thing to note is yesterday, look at these delta bars, all blue, very little red. Delta was relatively strong yesterday. There's a fair amount of buying, and that's why the primary scenario is a continuation of that buying. But this may come to an end, and then we might see us roll over and push into the 18 below. The 18 is a key target, key test target below, and it takes us into the gap zone. Okay? Good luck today, and keep your eyes open for tonight's debate. Take care.